Today, market participants are alert to the US non-farm payrolls and the unemployment rate for February. In the speech yesterday, the Fed chairman acknowledged the fact of rising consumer inflation. This happens in parallel to a surge in yields of US Treasuries. This double whammy is certainly putting pressure on Wall Street. The US market saw violent selling in Treasuries for the recent 3 days. The benchmark US stock indexes took a nosedive. Does the surge in Treasury yields is behind such a roller coaster? Experts are certain that is not the case. At present, the market is affected by other headwinds. For example, the stock market is clearly overbought, so a deeper downward correction is imminent. Today, Wall Street investors are facing a dilemma. On the one hand, the US government has provided the domestic economy with a large-scale stimulus package worth $1.9 trillion that equals nearly 10% of the US GDP. Such massive injections are virtually bringing to zero a 3-year growth of the US economy, which has been logging a steady growth of 3.5% on year. More reasons for market jitters are overbought conditions in the US equity market, inflated market quotes, and a slowdown in the US employment. Notably, one of the main features of the US stock market, futures on the S&P 500 index showed a downtick of just 0.2%. Now let's discuss the oil market. The global benchmark oil grade Brent conquered a record high of $68 a barrel, the strongest level over the recent 12 months. What's a catalyst for this spike? Could it be a sharp increase in the global demand for oil or contraction in oil drilling? The underlying reason is pragmatic. The outcome of the OPEC summit of March 4th propelled a rally in oil prices. The cartel decided not to raise quotas of oil output despite revival in the global economy as the coronavirus pandemic is ebbing away. The cartel granted an exemption to Russia, which was allowed to increase oil production by 150,000 barrels per day to cope with the robust seasonal demand for fuel inside the country. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you on Monday. We wish you profitable deals and have a nice weekend.